Hello, everyone, and welcome to TTR. This is the UK session, and this is Jeff coming to you live from Tasmania in Australia. I'll be joined by Ash very, very shortly, and be interesting to see how he's handled the overnight euro pound scenario. It went up, down, up, down. I just wonder how he got on. Sure, he'll tell us in a minute. Fair bit going on at the moment. At the last candle change, we've seen a big difference in momentum. There's been a momentum shift through what we've seen through Asia, which is basically dollar strength coming in. And now that we've changed, as we lead into the UK session, we're looking at a big turnaround on that as the dollar tends to go back into the sale bin. Okay, let's have a look at what's going on around the place today in terms of news events, and we see very much a whole lot of not much. Certainly in the morning, I don't see anything happening, and CB consumer confidence, I suppose, 3 o'clock in the afternoon London time would be the next major event, although I guess if a Fed member speaks, somebody will be listening, and if there was something coming out of Ms. Speak's mouth that is of interest to the market, we may see something happen there. Certainly we're seeing something happen before the open, and we'll take a look at that in a tick. Kiwi news, again, overnight there will be Kiwi news where the financial stability report comes out, and Governor Orr is having a busy morning in New Zealand time anyway, where he has a couple of chats around the place. So it's pretty much clear sailing as far as scheduled news events are concerned. Let's put it that way. There's always something going on. There's always trade wars. There's always Brexit deals and all sorts of things that will be going on around the place. So we'll be cognizant of those. And if there are moves, obviously we'll be looking to take advantage of them. Let's take a look at the markets and that momentum change that I was talking about. It's not really momentum change on the Aussie because the Aussie is still looking strong as it comes off this bottom trend line here, or I call them trade lines because they're not actually depicting trend, but certainly it's come off support, and in the last few minutes has really taken off again through the weekly pivot where it was struggling at the daily pivot there a little bit earlier. I'm actually in a short that's not looking that great at the moment on the euro. Trading that on the 4-hour basis. I was trading this little candle here because I thought there was an excellent reward available if we got this right. Very, very dangerous place to trade, always at the lows. But I've chosen to do that, and we're just around about a little bit out of the entry at the moment. As that momentum did swing, we were heading towards TP1 there earlier, but that momentum swung as that 30-minute candle closed only about 5 minutes ago. Let's see if we can kick a goal here and get this home. There's not much of a stop here, to be fair. It's just above the daily pivot. My stop is where? 26.2 off 119.8. So 146 is where my stop loss is, which is around about there, just above the daily pivot, as I say. If this does get into TP1 territory, I think I'll leave my stop there. I won't move it. I think that's the place for the stop at the moment. But the one thing here is, and this is the risk I'm taking into this trade, this is where there'll be a lot of stops. And if that's the case, then we should be okay, to be fair. If they're stops from a long position, there'll be sell orders, and that'll be fine. But I don't know that we've seen that. Maybe we've just cleared the stops out, and now we're looking, the market's looking to go long. We'll see. And, it's one of those 50-50 things. You're either right or you're wrong. But I've got a good reason to be in this position. And for mine, it's these 3 candles here, backed up by this big candle here, backed up by that big candle there. On the daily chart, looks even more pronounced. And you can see this big bar here, big reversal bar off the monthly pivot. Then you can see this big reversal bar off the monthly pivot again. they're the two candles that I was taking into consideration as I went into this order. And I thought the test of the bottom of this range was pretty much on the cards, and that's why we've got a TP1 before there. Got a target down here that I'll probably move and just give this free run if it can get us in the right direction. Other than that, there's the absolute possibility that there are stops here for the buyers, and if they clear those out, then there'll be some liquidity here as well for buyers. So not across the line by any stretch here. In fact, we're still just out of the money, but we'll see how that one goes. It's the only one I've got, but I do note that the Aussie is hanging on, and I think that of the majors, that's probably the strongest of the three, and that's pretty evident if you have a look at the pound as well. It's a breakout short at the moment. Whether that's sustainable or not, we'll find out. We're testing these lows probably, and then we'll see exactly how this cross can hold its own. Of course, yesterday we're speaking about it a lot in regard to the Brexit rubber stamping by the EU leaders over the weekend, and expecting, well, the market was entitled, if you like, to rally pound US dollar on the back of that, but it didn't, and we spoke about that also. And I figured if they weren't going to rally, they're probably thinking something else entirely, and maybe we're seeing that. Maybe that's come in, and maybe we're going to see this break this rectangle to the low side. Is that Ash I can hear in the background?
Oh, mate, sorry. Yes, I'm just here listening to what your analysis is. So I didn't want to disturb you.
Oh, mate, once I'm wound up, I'll just keep going. It's like the ever-ready battery until it runs out of juice. That's pretty much all I really wanted to say at this stage. It's interesting in that we didn't get the rally that we're expecting out of the pound and potentially the euro yesterday. And are they thinking something else? It's still a question mark for mine. I don't think we can say definitively that, okay, there's a bear attitude or a bull attitude at the moment. I think it's pretty much we really don't know. But
no, you're absolutely right. The date to put in everybody's diary is December the 11th, which is when we will have the vote on the deal.
I thought you were going to say that's my mate's birthday. It's when we're going out.
No, so yeah, but that's going to be quite an interesting run with the pound, and I think maybe that there could be some possibly to and fro-in. I agree with you. I got a euro pound trade yesterday. I can quickly show you that.
Yeah, how did it turn out?
Well, I mean, it turned out profitable, but nowhere near as what I was really after. But let me show you what was going on. And what I had to do with it. So let me share my screen. There we go. Yeah, so I managed to get in around about the 60 something level. I can't remember exactly what it was, but it did come back to the downside. As you can see, that the monthly pivot was the first take profit area. And my idea, really, my plan was to take profit here and stay in. But it did start to cause a bit of an issue, when I started to look down here and it wasn't breaking through that daily pivot the monthly pivot, and it was starting to effectively rebound between the two areas. I got a little bit kind of tired of waiting, so I took the whole trade off in the end. The second half wasn't quite at the monthly pivot, but I managed to just take the second half off at some profit as well. But it was it's not pointless profit, because actually it was one of those profits that saves the loss rather than makes you a whole bunch of money. It wasn't one of those that was worth staying in. It was much better just to come out and just take what was on offer. The market I'm interested in today, and this is a little bit of a tricky one for me, and I'm going to talk about the FTSE in a moment, but this is a little bit of a tricky one for me, because I've got a potential trade on the CAD yen to the downside, and I also traded this yesterday, but I've also closed this one off. But in actual fact, I think it looks okay. The reason I closed it off in the end was because I like the technical setup, and I'll show you a little bit in detail with the technical setup. I like the fact that we are at a potential swing, that there's quite a lot of of detail kind of here. And it was just I took the trade when it was starting to come down a little bit. So we're at a potential swing area from that perspective. We're at a potential swing area from the horizontal perspective as well. Breakdown and back test here. There's also a trend line which is along here. So there was a few reasons for me to look for the short in this one, but the issue really comes from the 4-hour chart, because the 4-hour chart really, let me just tighten this up a little bit. The 4-hour chart is really in an uptrend, and that break and break back through again was what kind of started to spook me. Now I got in at the highs, pretty much at the highs here, but as it came down. And again, just started to look like it may hold. I took the trade off, but I actually think it looks okay for some downside. But my biggest problem with it is that I don't really know either the Canadian or Japanese.
Say, you picked a tough pair. I mean, the yen's been so weak; it's due a bounce. The CAD's rides on the back of oil mainly, and the oil's been just tumbling like you wouldn't believe.
This is the thing. And that's the thing, when you put those two aspects into the equation, I start to look at it and go, am I going to be able to have the heart to hold on to this one, when things go against me? Because the difference with trading for me with the FTSE and for you with the euro is that if things don't quite work out with the trade, we will tend to have an understanding of why, and it might keep us going in that particular direction, but just at a slightly different price, because we know the fundamentals match up. But with this one, I don't have a good enough grasp of the fundamentals for me to be confident that if things went wrong at this particular level, would I go short again here? And that's always the question for me. And that really that's something for people that trade fundamentals. The idea with fundamentals is that you take an overall position, you take an overall opinion about a market, and that means that if you are let's say you're short the Canadian versus the yen, and it comes down, and you've gone short, let's say somewhere around about here, because it's there's a break here. Now, if you're a fundamental trader, when it pops up, you're not too bothered. You'll go short again here. You might take the trade off, but a stop there. But you'll go short again here because your long-term view is for a short. So every time it comes to a level, you'll go short and short and short. But this is the thing for me. I don't really have a decent enough grasp, and I've got a vague grasp of the fundamentals of all the currencies, but not a decent enough look under the hood type of grasp like I do with the pound, which is why I tend to kind of gravitate towards the pound and occasionally the euro, and more often than not the FTSE. So I had to take that trade off again at a very, very small profit, but it was one of those profits again that just protected the loss rather than making a whole bunch of money.
What do I always say, mate? You can't go broke banking.
You can't go broke banking, no matter how much. And this is the thing. Now, let's just have a quick chat about the FTSE, because the FTSE is also a interesting, but to my mind, a little bit of a tricky chart, and a tricky market actually to trade at the minute. What we've had is a move, obviously, to the downside, another move to the downside, a drift to the downside in this channel, and then it popped up yesterday quite significantly and just managed to hit these highs. Now, in the last 15 minutes, it's just tried to escape the highs, and it hasn't managed to make it. But I think there is probably enough strength in the market, and there's probably enough seasonal. There's probably enough of a seasonal aspect in the market to suggest that the longs are probably a safer prospect right now. but obviously we're not going to try and go long here. So really, I might be sitting on the hands day today, because what I need to see is either a break of this point here, and then come back. So I'll be waiting, at least a day for that, Or the only potential way that I can get in to this today is if this comes down and tests the these levels down here, and which I'll get to it in one moment. But these levels down here, looks like there's a little trend line along there. It looks like there's a possible shelf there. Might even be a trend line along here as well. So there's there's a few areas of price here. Obviously, kind of coming down too far is going to break this trend line, and it's going to start closing or stressing that daily pivot, and it's going to look a little bit expensive. So got to be a little bit careful, but I suspect if it comes down to this daily pivot and I get something which suggests a hold, that might be the only possible place to go long. And then we can see what happens, because I've been waiting for the FTSE 100 to hit this area for a long time, the 7220 area for a long time, and it's just ignored it. It's not it hasn't played ball. It's drifted and drifted and drifted. But I still would like to see that particular area tested at some point, and I think that we might well be going into the little Santa rally kind of area, and if that's the case, then we may well start to see this area. And you can see when we bring
it's a nice
in
target, isn't it?
it's a really nice target, and when we bring this line in here, this is starting to suggest that we are literally, what's this now today? It's the 27th. That'll take us to so it looks to me like if we were looking at some sort of timeline confluence as well as price confluence, it suggests that we will be starting to move into this area towards the end of the month. So it looks like maybe this week, if we can get a long in on the FTSE 100, then we should take a long, hold on to it, and see if we can get right up to this point. So that is the current strategy. The current strategy is to try and go long. I'd like as good a price as possible. I think if I don't get the price, it's going to hurt, because I think I'm gonna have to ignore it. I'm not really that keen on jumping in on the way up on the whole, because I think that this market is very stressed, and ultimately I'm looking for a short, but it's just I want a short here, and the short is almost 200 pips away, which is a fantastic range for the FTSE. If we can get a couple of hundred pips towards the end of this week, then that's a really good range. Now, it may seem like a ridiculous notion that we're going to be looking at 200 pips in the next few days, but have to remember we're kind of getting very close to the close of the month, very well, not yet close to the close of the week, but the close of the month, and as the week draws on, that those particular timelines are going to be quite significant. So I'd really like to see this as a shooting star. Which would suggest, and just to give these bars here just a little bit of context for any listeners, if you see a shooting star or a hammer on a specific time frame, it relates to the next period of that particular time frame. So if this ends up as a half hourly shooting star here, that means the next half an hour we are going to look for a drift down. Then half an hour after that, we might start to see something different, and then we can start to look for a drift up. It doesn't necessarily mean that we have a reversal area of significance. It just means that we have a reversal area on that particular time frame, which is why anybody that's looking to intraday trade should always look at your daily chart, because if you see I mean, this is more of a spinning top, really. But if you see a spinning top at a low, that would suggest the next day that you have a period of upside. So then you can start to mine into your shorter term timeframes and see if you can get a trade. But that's just really something for the guys out there that I'll look at this, and I won't look at this as a long term move to the downside. I'll look for at least half an hour's weakness, and then look to maybe get in around about 8:30, 9 o'clock back to the upside again. So I'm hoping in the next 9 minutes that this does just want to kind of shove down here and refuse this area, and give me a prospect that we see some weakness, because really we do want to be looking at a long in the FTSE 100. Unfortunately, we just had a 5-minute setup to the upside, but it's just too expensive here, and I'll show you that. Look at this 5-minute setup to the upside. We got a break and a back test right now. Nice little spinning top. Or low test bar, I think that might even be classed as, and that would suggest that we're going to get some upside. So unfortunately, I can't trade it here. too expensive. You know, even if it does go, and it's a tricky one really, because actually this particular area, when we look at it in a little bit more detail, let's see on the 4 hour, this particular area in a little bit more detail is actually a break area. You know, this is the area that's managed to break and hold above. So is it is too expensive for me, but actually breaking a back test of this particular trend line, and it's not going to be that shocking if this does take off at this particular price. But I'm going to have to let it go, mate. It's one of those, you know. I really want this FTSE 100, but it goes against everything that I kind of stand for to pay what I would regard as a too high a price when we've had all this.
Then that says it all, doesn't it? I mean, you just don't
Yeah.
trade when that's the case. It's very, very
Yeah,
simple.
and you know, the way that I will look at it is, and you know, we both know that there are always opportunities in the market, and the way that I will look at it is that if I miss this in this particular area, I will unhappily let it go and drift back to this upside while I'm really kind of getting ready to short.
Looking for the
So
trade you're after in the first place, yes.
exactly the trade that I've been after for about a month, yeah, which is the short. So if it goes, it goes, and I will ignore it, and I'll wait for my opportunity, and maybe early next week I will look for the short, and I can see if I can get a proper swing back to the downside again. And this time I'd like to see if we can actually get through this this lower level and genuinely start a bear market to the downside, which is really what my belief is. I believe that I have a belief that we are about to kind of swing a little bit more aggressively in the opposite direction. I think that there's far too much out there. You know, the trade war tension is lifting a little bit, but it's still there. The Italian issue is lifting a little bit, but it's still there. Brexit is starting to clear up, but it's still there. And then on top of that, you got FOMC raising rates, and we know when FOMC start raising rates and treasuries start to the yields on treasuries start to go up, people are going to start moving away from stocks and start putting their money into cash and bonds. So I think there's enough out there to suggest that really longer term we are looking to sell this market, but we just need a price which is a bit more attractive.
Okay, fair enough. Look at that candle there that I'm looking at. You've got a big reversal bar on the 5-minute chart, but this is a 4-hour chart I'm looking at on the Aussie.
Oh, okay, let me see.
That's very interesting.
Oh yes, yeah, that is interesting, isn't it? So the Aussie is suggesting some weakness as well.
To be fair, this actually rallied in a heartbeat for some reason. I've got no idea why.
We just had the same thing, mate. Exactly the same thing on the FTSE.
Yeah.
Yeah.
Yeah. Well, actually, yeah, it's exactly the same move. Yeah, I didn't really think about that. You were a 5-minute candle. This is a 4-hour candle. But when I think about it, this happened in a heartbeat. So
can you break that down? Could you give us a 5-minute candle?
Sure.
Let's have a look what time that happened, because something was
It happened on the change of half hours. There's it. That's
same.
it
there. Yeah. So was it 1, 2, 3, 4, 5 candles back?
Yep.
Yep. Same. So let me show you the
FTSE. Said something.
Check this out on the FTSE. This is the FTSE. Same, right?
Yeah, exactly the same.
Which is, you know, this could make the day a little bit tricky, right? Because, you know, as I say,
the Aussie up there, a while back, and then wow, look at that, because it smashed through both pivots, but now it's wow, that's really interesting bar, that one, and getting stronger.
Hold on one moment. It sounds like there might be something from Trump. One second.
Somebody said something, I'd say. What's the others doing? Yeah, Euro's going. Trump said something, I'd say. You're right. That's not going to hurt that.
I don't know.
Hopefully that can get to...
Maybe asleep.
Yeah, he never sleeps, mate.
You're short Euro, right?
Yeah.
Yeah, nice.
Well, it's not there yet, but nearly.
You haven't triggered in yet?
Oh, no, I'm just at very close to take profit now.
Oh, very good.
That's what we're looking at.
Very good work. Oh, that was early.
Yeah, a couple of pips to go.
Nice, mate.
Might be a decent ride. You never know. I'd like to know what it is that's going on, but there's definitely something going on. This is not
Nice work. Nice work.
Are you picking anything up or no?
I'm picking nothing up. I'm picking nothing up. I thought maybe it was Trump, but wouldn't he be asleep?
No, he never sleeps, mate.
He never sleeps. He's a lizard.
Not about that. But
I thought I heard Trump mentioned, but I don't know. I don't know what that was about. So, well, how are we doing with? Let's just have a quick check of some of these other markets and see if we can get any kind of barometer. So we've got this is Brent crude, which is still looking kind of weak down here. Yeah, that's in the doldrums, so we don't really need to look at WTI, but we may as well. It's going to be exactly the same. Quickly check copper. Copper doesn't look particularly good. It's on a weekly chart there. Geez, you know what? Already I've got a day which is sounding tough. I'm glad you've taken that trade in the euro.
Well, we'll see if in 2 minutes what happens. There may be a complete reversal in 2 minutes. We don't know that.
This is gold.
That's why I'd like to be at TP1. What I actually might do is move my stops to entry on the open, because this could reverse quickly. If it doesn't,
yeah. Yeah, it could, couldn't it? I mean, this is the FTSE.
Anybody who's in this with me, I've moved my stops to entry just temporarily.
Let me give you back the screen so we can see that.
You won't see too much. It'll just tell you that I've moved my stops to entry, basically. So I've moved my stops to here.
Okay, mate. Well done.
Just below this bar. Because this, as I say, this could reverse very quickly if it isn't for real. And I don't want to turn this into a losing trade.
Yeah. All right. Well, let's watch this FTSE open, because this is just about to start in 15 minutes, and it looks like that that shooting star is coming into play, which does suggest that we're going to get this move to the downside. Here we go, and the market is open. So let's see what we got. Pretty tricky, really, because you know, after just seeing all that other information, it's suggesting that the short is probably on. Not bad, you know. If anybody wants to take a short, it's not a bad trade in a lot of ways. You got about a 40 pip stop. You got a nice candle to kind of to come against, and we are at these highs here. Kind of tempting, isn't it? I'm going to leave it. I just I don't feel very in sync with this at all. I just no, and I wonder whether it's just because the markets aren't really in sync. I wonder whether they kind of like they want to pop to go higher, but they're kind of showing some weakness. And yeah, I don't feel very in sync with direction here. I mean, I like the direction to the upside from what I was saying earlier on, just to get to that that 70-20 level. Sorry, I was just.
Yeah, I'm just trying to think. I'm trying to manage this trade, and
Oh, sorry, mate. You manage that trade. I will just I'll continue with this screen. I had my ear on in the background because there was just some sort of talk of Chinese data and news. Okay, so while you're doing that, let me have a look through some of these other markets just to get a general feel. Now the CAC are on. We want to check. Let's check the European open and check the European markets and see what's going on. We'll check it on a 15-minute chart. We're going to check the CAC are on, which is the French market. CAC are on is okay, so I've just heard that the Chinese Yeah, the Chinese have saying that there could be a deal on the trade war and on the tariffs, but it's left people a little bit confused about what that means. This is the Chinese stocks. These are Chinese stocks. I'm wondering, see, with the FTSE 100, I'm wondering now whether I should just wait for a nice clear message to go short. Don't try and play the long, because it's a bit mixed out there. It doesn't look to me like it's going to be a particularly solid day. So the fundamentals and the sentiment in the FTSE 100 are a little bit confused and a little bit weak. So because of that, I think we are much better to wait and see what the picture, how the picture unfolds. We'll wait for some confirmation on what direction people want to go in. We could look for a short. And by the same token, we could look for a long at the daily pivot, and the market and the charts at this stage are struggling to give us that direction, and the sentiment out there looks and sounds a bit confused. So I think we sit on our hands for a little while and see what happens. This is the Chinese market. Very interesting. This is a daily chart. Interesting gap to the downside. So this is called the pregnant mother, if you like, where you see a bar inside a previous bar. So this does tend to have bearish connotations because of the gap. Now let's have a look at the gap. Not very significant there. So breaking down the Chinese market doesn't look particularly clear. This is the DAX, which also doesn't look particularly clear. I'm just trying to make a choice here on the FTSE. I see that you must have hit profit now, buddy.
Mate, I'm within half a pip of profit, and because I'm managing this on a it went through the profit level and didn't take it. That's what I hate. There we go. We're through now. That's all good.
Well done, buddy. Well done. Nice, nice way to start the day. That's what we like.
That'll do. I mean, we had this attitude yesterday, and we didn't get the opportunity to trade it, but you did and made money. So now we've kicked into where we wanted to be yesterday. So all good.
I'm really tempted. You know what? I've got a real problem with this FTSE because do you know what? Do you know this is my issue with the FTSE is that the market has been weak, and at this stage, until we take out this particular level, we're in a downtrend. We're still in a downtrend. Now the pop forward yesterday, which gives us this morning star, suggests that we could get through the level, but could is not good enough, and we are getting some signs and signals of some weakness here. So now I wouldn't go long here, but going short here, and you know, obviously we have this this spinning top, which is attempted to get through, but it hasn't really got through. This trend line is problematic. That's kind of problematic. So, well, Trump is talking about the fact that he's where we may well have made a deal.
Now the speculation was that what was it? Well, fake news. Who knows? He was saying that he's going to stand firm and he's going to put these 25% tariffs into place, regardless of whatever happens.
Yeah.
Are we now saying that he's made his own fake news?
It's so difficult to know. To be honest, just, you know what? This is the funny thing, actually. But Bali is an amazing experience, and I love meeting all the traders and speaking to them about everything. But one thing it does for me is it kind of takes me away a little bit from the constant news flow, because when I'm in the office at home, I've got the news on all the time. When I'm trading, I've got the on all the time. So so you end up getting a really good feel and a really good sense of the market just by default. You know, and this is the thing about the Canadian and Japanese economies. I think I'd have a pretty good handle on the Japanese economy specifically if I was trading while the Japanese market was open. But the reason that the obviously the euro and the European and British markets are a lot easier for me is that I'm trading when the markets are open, and they talk about them openly on Bloomberg. You get experts with opinions, and you start to kind of form a pretty nice take on how you should be looking at the market. Just, you know, as I say, by default. Um, but because of Bali, you know, because when we're sort of like away in Bali, I didn't have the opportunity to have Bloomberg stuck in my ear. You know, we've got a lot of other things going on, which is much more valuable actually than having Bloomberg in the ear, because you've got 9 or 10 other amazing traders in the room that trade the market in very, very different ways, and it gives us a really good way to develop as traders. But what it does mean, you know, just kind of back to the point, is that I'm a little bit out of sync with where the state of play is with trade wars, and Brexit was easy for me to get back on top of because it's just watching some iPlayer and some reruns of things. But when it comes down to trade wars and what's going on in Italy and all that sort of thing, I'm a bit out of sync. I've got to be honest, mate. I'm not quite on top of it as I was. And I think it's going to take me a little while to get back there.
Yeah, look, it's not only that, you know, and I agree with you. You know, Bali is an incredible experience where you just have so much information available to you, and you know, if you're willing to sit down and consume even 1/10 of it, you know, you come away with perhaps a different viewpoint, and nothing changes. I mean, you've still got your own method of trading, but every day there's something you go, bingo, that's just not a bad idea. You know, I might have a look at that, and you know, I might take that on board, or wow, I never saw that before, or whatever the case may be. And it actually does take a little bit of time to come back here and sit down and trade your own stuff as you would trade it normally, because you've got all these ideas going around in your head, and you're seeing things that you didn't see before, perhaps. It is a tough assignment to actually sit down and get everything, you know, back to where you want it to be, and think about those other things maybe at Christmas time, you know, when you've got time to put them into practice.
Absolutely, and that's the thing. I think that's the interesting aspect of it, isn't it? Because, you know, you've got traders in the room that trade in such different ways, and you know, for you to be slightly better, and that's all you need sometimes, just a little bit better than you were before. Then you want to take some of these ideas on board. But yeah, as you say, it can be actually a little bit confusing at first, because your peripheral vision is there, but the detailed vision isn't quite. And that's where it starts to get a little bit confusing, I think.
Of course it does. You know, even the most experienced of trader will probably go away and think, wow, I got some very handy information there that I didn't have in my toolkit before. But I can't I just can't go back to the next week and start trading that. That's humdrum. You know, you trying to.
Did you trade last week?
No, not at all.
Oh yeah, you see, you probably I made the mistake of trading last week, and it was actually not very wise at all, because of that very thing.
Yeah,
just I was completely out of sync. And there was one point I posted in a messaging service that we got that I was taking trades that I had to close. And to be fair, that they were at slight profit, but I had to close them down because I just couldn't. I was getting to the point where I was getting a little bit stock blind, if you like, or chart blind. I couldn't see what I needed to see. I had no clarity in my head of how my plan was going to be implemented and work out. And I don't know whether I'm still there a little bit. I think I probably am. I've just got to kind of get back in the swing of it. Unfortunately for me, next week I'm off to Singapore again. So. But trading is one of those games, isn't it? That as soon as you relax, it will run you up. you know, and I think that everybody needs to recognize that, you know, because if you can recognize that, then you'll be fine. Because actually, when things don't go your way, then okay, take a break. Just take a break. That's all you need to do. Take a break, because actually the market is it offers an abundance of opportunities, and if the abundance of opportunity isn't going to be that day, there will be the next day, or the next day, or the next day, and there are opportunities out there. So you just have to wait, because clarity will arrive. So
yeah, it's just adopt the attitude, and it's something that we talk about often, and certainly I talk about often. Thank God trading isn't compulsory, because I'd be
yeah.
broke for sure.
So do you know what I think would be kind of cool? I think it'd be kind of cool if we have an exercise. So when you see a market, or maybe this is something that you used to do, and this is certainly something that I used to do, and this is something I think is kind of good to work on. And in fact, mate, before I do that, have you got anything that you need to manage or look at?
No, mate, no, all is well.
Okay.
My next move is at where TP2, which is around about the DS2 level, WS1 level. If I hit that, I'll move my stops back to entry. Oh, by the way, my stops have now moved back to minus 15. So they're way back,
Right.
back
Okay.
out of the danger. Well, for now, out of the danger zone. So
All right, mate.
I'm
Good stuff.
in a free trade situation, is what I'm saying.
Brilliant work. As I talk, there's a setup on the FTSE 100 for a short, which I'm really tempted on. I got to say, because because of where the market is, and as I say, we are in this bear trend, this downtrend. There's a nice little short that's come in. But it's so mixed out there. It's so confused. I don't think I can justify it. So anyway, let's get back to talking about something else. So now with the market, I think that there is one of the dangers is that you look at moves, and you feel a bit deflated when you see a move happen, because you think about, I don't know what goes through your mind. Is it the money, do you think, or is it the being wrong?
For me, it's the being wrong.
The being
Absolutely.
wrong. So not being wrong, being right, but missing it. They're the trades I'm talking about.
Oh, okay. Well, look, I used to have that. I used to have that syndrome that would dictate that if you miss a trade, and look, here in Australia, we're at the wrong time of day, really, because if you want to trade the first few hours of UK session and then have a look at the first hour or so of the US session, you're spending a fair bit of time sleeping in between time, or you should be sleeping mostly. And we used to be in a little group. We had a little Oz syndicate. No, it wasn't a syndicate. We're trading our own money, but we had this little group going. I think there were probably about 5 of us, and we used to take it in turns. And we actually were trying to trade through the whole of the US session, and of course that's completely through the night for us. That's like 11 p.m. till 5 a.m. and we used to have a signal watcher. So if something happened, you had to be the one that was awake that night.
No, really?
Yeah, and we'd stay up through the night, and and if something set up, you'd send a signal via phone to the other members of the group, who had to wake up and then try and put this trade on while you're asleep.
Wow.
Look, that didn't last that long. I've got to say, we kind of ran out of steam on that one pretty quickly, because 2 reasons: A, we weren't getting any sleep, and B, we weren't making any money. So that turned out to be a reasonably bad idea. But the whole point is we were prepared to do it, and that's where I'm coming from. We didn't want to miss a trade, and that was the whole thing. But it's balmy. It's bullshit. You just cannot catch every move in the market. It's not possible. And the sooner you realise that, the better it is. And if you sleep through it, there's no issue really. But what you're talking about is if you know that that's going to happen, and you just can't find a way in, or if there was a way in, you didn't take it, and that's That's the medicine that you have to swallow, you know.
Yeah.
And that's going to happen too. As pro traders, you try and make that not happen, and that's your job. You know, at the end of the day, is not to miss those setups, and that's when it becomes hard when you do, because not only have you missed the opportunity, you've missed the opportunity to make money. You know, you've missed your wages for the day, if you like. You may not, you may get another opportunity, but if you don't take the one that's there, that's the feeling that you have. You have the, well, gee, you know, I didn't make my pay today. Simple as that.
Yeah. Yeah. So, well,
but you can't
so
beat yourself up at the same time.
No, you can't. So what I think, can we come up with an exercise that gives people the ability to disconnect with the market? Because that's what we need, isn't it? We need to disconnect. You know, we can't get emotionally involved in the market, because as soon as we're emotionally involved, we're done. And I think that's the key. You know, we sort of like, so we need an exercise, or well, not we need, but it'd be great if we had an exercise where we could literally just be looking at the charts and seeing them in a different way, you know, so they don't become sort of missed opportunities or anything like that. They become something slightly different. Because I think, well, I don't actually know. I don't. I'm just wondering whether there's something that can, because that's I think that if we could teach people how to disconnect from the market, then they would be a long way forward in their trading. And I think that you know, most ways that you teach is by games, right? There's a really good way to teach anyway, if you can sort of like, you know, have games. So I'm wondering if there's something where we could run the game, but I don't know. No, I don't really have anything, mate. And
well, the very first thing you should do, you know, if you want to disconnect, and this is a very difficult exercise if money is your thing. If you've got a trade manager running, for instance, it's going to show you your profit. If you've got the terminal open, it's going to show you your profit or your dollar value or whatever the case may be. That's the first thing I would do, is just get rid of that, switch it off. Don't look at it. You know, you're not governed by what's going on there. You're governed by what's going on the screen. You know, you're governed by what price is doing, not by whether, you know, that amount of money means something to you or doesn't mean something to you. And if it does, you probably shouldn't have it in the market in the first place. You know, if you're not prepared to lose what's going on in front of you, do you really want to be in the market at that time? You know, that becomes the question. Should you be actually trading? You know, if that's going to be a great concern to you, and it can mess with your head. Absolutely, because, you know, if you think, oh shit, there's another $100 gone, that's all I'm prepared to lose. But you should have made that decision well before you went into the market. You know?
Yes, absolutely.
And therefore, you should be able to disassociate yourself from what's going on inside your little account there that's ticking over, or what's going into the bank or what's coming out of the bank. You know, you should be able to disassociate yourself, because you were prepared before you entered the market to lose that amount of money.
Yeah.
So, you know, get the money out of your brain and focus on the process. That would be one way to do it. Now, how you put that into an exercise?
So we want to get the money out the brain, don't we? That's the key.
Yeah. All right. Look, that's a little bit short notice, but I'll work on it. I'll see what I can come up with.
Yeah. Okay.
But there's
all right. Yeah, because this is the thing. If we can get the money out of the brain, then as I say, I think trading would be so much easier.
Yeah, it's a whole lot easier when you're a long way in front for the month. You know, it's a whole lot easier to trade than when you're, you know, maybe 3 or 4 trades down, and you're coming towards the end of the month, and you think, well, you know, I'd really like to get that back. And we all, it's human nature, you know, to say to think that. And I don't have any problem with people who think that. But
Oh
what I
man,
do
do you
have
know
a
what?
problem with,
I think we might be onto something here. I think if we could somehow give people the aid to trade um, away from that stuff, sort of like somehow give people something that would help the psychology. So the thoughts of I need to make this money back don't come in, or the thoughts of or even the thoughts of, oh, I'm so far up now, I'll take this trade, because even that is bad. That's really bad practice. It's really sloppy, and I've
absolutely,
done it in the past. Sort of like where
we've
you
all done
kind
it.
of yeah, where you kind of think, well, I'm so high up now, I may as well take this trade. Then you lose that trade, then all of a sudden you're going, well, I'll just make that money back.
Yeah.
It just becomes like a vicious circle.
Oh, the
Um,
mentality of a gambler is an amazing thing, and that's what you're turning yourself into if you
yeah,
start to trade that way.
yeah,
Um, the, the the game will win every time if
yeah,
you've got that emotional contact. It's just can't work because
yeah,
the game's set up to beat you in the first
yeah,
place.
yeah,
You have to be on top of your emotions all the time.
yeah,
And
yeah,
look, worst thing I ever did. One day I just walked back, and I'll be absolutely frank. I walked back from the hotel, so I'd had a night out, and it probably was a Friday where I don't trade at all. But I just happened to walk into the office and saw this setup, and I got traded at about 1.5%, something like that. So it was just the dumbest thing to do of all time. And the second dumbest thing I did was once I put that trade in, I traded it without a stop, and I've got alcohol in me, right? And I made a horrible mess of that trade, and
yeah,
never forgotten it, never will. And I guess the good part about that is I learned a very good lesson. But this was in the early days, certainly wouldn't do it now that I've got
yeah.
a few years behind me. But they're the sort of things you can do because you're just reckless, and you've got, well, in that case, you've got, I'll say I had absolutely no care in the world. There was absolutely nothing going on in my head. So that's the other side of it. You can't be too laxical either. You have to
Yeah,
treat it professionally, and that's
yeah,
certainly not treating it professionally.
yeah, yeah, absolutely, yeah. Well, you're absolutely right. I mean, it's a balance, isn't it? Because there's the part where you have to be professional, and then there's the part that you almost want to treat it like it means nothing. So you are looking at it visually, because and I don't know. I saw the topic that we're going to discuss later on that you were suggesting, which I think is a fantastic topic.
All right. Yeah.
um and it really and this is where that comes in, doesn't it? This is where that kind of thing comes in. I don't
Yes.
want to be too ambiguous with people, but the discussion later is going to be about robot trading. And I think that's a fascinating conversation, because there's one of the biggest killers for traders is emotion. And if you can take emotion out of the game, which obviously robots do, then you will probably make a lot more money. However, I think if you could take emotion out of the game and trade correctly, I think a human could beat a robot every day of the week.
Yeah, look, this is going to be the conversation, isn't it?
Yeah,
Can we beat the machines? And I go straight back to Arnie Schwarzenegger and
yeah,
Terminator.
yeah,
It's all about the machines, isn't it? And AI is just a scary thing for me, but it's fascinating at the very same time. And they're so close to getting that Terminator scenario that to me it is scary.
yeah,
They will take over. I don't have any qualms about saying that, but how far can it go, and what does it mean to us as traders is the question I'm going to ask tonight. But to
mm,
me, it's I agree with you in so far as in the current environment or even the past environment, a good a good human trader will beat a good machine trader. But I'm not sure if that's going to be the case into the future, because
Well, do you know? Yeah, go on, mate.
because how do we know that the market's still going to be the market down the track?
Yeah.
And we can say the market has always been the market. The market is the market. Nothing's changed, and I agree with that to many degrees. But inside a day, intraday trading has definitely changed, and
Mm.
that to me is definitely computers doing that.
Yeah. Yeah.
And look, I'm more than happy with it because I can read it to some
Yeah.
degree. Because I see the support and resistance levels that they're trading off many
Yeah.
times, and that's very helpful if you're in a trade and want to intraday get out of it, because
Yeah.
there's very obvious exit points in my book. But whether that will remain the case is an entirely different story. So,
Do you know what, mate? In my opinion, I don't know if it'll be in our lifetime, but in my opinion, they'll be banned, because
blow
I
them up.
don't. What's that?
We're going to blow them up.
No, I don't think we'll
So
blow them up.
we're back to Terminator, aren't we?
Do you know why I think they'll be banned? I think that there's going to be a lack of volatility, and that will be the issue. I think you need human emotion to make the markets work. I think, and as I say, it may not be in our lifetime. What's that, mate?
I think it's banned in general. You mean banned from the market?
Yeah. Yeah, I think they'll ban. I think they'll be banned. I don't think they'll be banned, as I say, whether it's in our lifetime, I don't know. But I think if the big firms are taking trades off robots and it literally goes there, it will become so transparent that I don't think the market will end up moving. Yeah.
Yeah.
So
And look,
and if there's
we've seen that to a degree already, haven't we? You know, where
yeah
the market will just go sideways forever
yeah
before it breaks out. And you know, I guess that's always been the case when I think about it again, because you know every consolidation is, or sorry, every trend is a roadmap to the next consolidation, isn't it? Always has been thus, but there
yeah
seems to be protracted ranges these days, and that, you know, I've had to deal with that as an intraday trader, and I found that it's not that tough because there are defined ranges, and I think that's pretty cool, to be fair. So I don't really mind it, and if that is because of mean reversion, as it appears to be to me, then okay, let's deal with it. But as you say, though tinier and tinier and tinier, the game becomes a very, very tough one, because you're going to have to trade on
yeah
1 minute charts or tick charts. You know, who wants to do that?
yeah. Well, absolutely. And the thing is, you can't actually do that because of the spread. So you know
Yeah.
that this is of no benefit for us when you get kind of 1 minute charts or tick charts where you've got to make 2 pips before you've made anything whatsoever.
Yep. And that's one of the reasons I don't trade, you know, minors or certainly exotics, because
yeah
you know, I'm looking for a very fast take profit, because
yeah
in many respects I'm going way against momentum. Well, in all respects, I'm going against momentum. And if I'm wrong, I need to be safe when I'm wrong. If you understand what I'm
yeah
saying,
I absolutely do.
I can't allow it to run in case I'm wrong, because
Yes,
I can
yes,
be wrong often and still make money.
yes. I completely appreciate that. Yeah, absolutely.
New candles.
Well,
Should we have a look?
yes, mate. Yeah, let's get on to it. Yeah, new candles. Yeah, let's have a look at what you've got, and let's have a look at what the FTSE's doing.
All right, I'll start with the Aussie, and that amazing bar we saw in the last 30-minute candle. Oh wow, one but the last. Why can't I see my screen?
You sharing?
Yeah, coming now. Should have it now.
Yeah, got it.
Yeah, look, that's a pretty amazing bar, I've got to say, and
Incredible.
that has to be Trump and China, because the Aussie dollar is very reliant on what happens in these trade wars. Very reliant on it, and I think what we saw maybe yesterday even.
Okay, sorry, mate. The headline is that Trump has decided he may well slap more tariffs on China. That's the
Okay, well that explains that.
that would explain it. Yeah.
Yeah. As I was saying, the Aussie is very reliant on what happens with these trade wars. Very reliant on it because China is a major partner. Trade partner. That's true. Of Australia, and one of the other major partners, of course, is America. It's a mess, but China, Trump's pardon the pun, not intended. China actually is far more influential on Australia's economy than is America. And if this goes badly for China, it's going to go badly for Australia. There's no two ways about that. And I think the rumor leading into these talks with Xi and Trump were that there'll be an easing of trade war tension. We've now just heard the reverse of that, basically, and that's why you've seen that the Aussie come off immediately on that news. Now, whether that, again, is sustainable and whether that actually happens is yet to be determined. So we're actually, and this is the interesting part about it too, Ash, the market is actually working these days more on rumor than I've ever seen it. Seen it. Because the old thing, buy on rumor, sell on fact, is probably still there. But there's so many, I guess, reasons for the market to move these days because you've got someone saying something seemingly every hour of the day when these talks for Brexit are on, when there's an election on. That's always been the case, I suppose, when there's an election on. But the market is really reacting violently inside a day to all of these. I can't call them scheduled news events because most of them are not. When we get a violent reaction, most of them are somebody said this or he said, she said, whatever the case may be, and it's not easy to trade around that because you never know when it's going to happen. And that, again, teaches you a little bit of a lesson where if you are trading intraday, maybe, your risk needs to be according to that. Maybe you need to just, when it's in a very, very bad or potentially volatile scenario, like these talks coming up, there's going to be rumors. And there's going to be one's going to say one thing and the other's going to say another, and the market's going to do this. So two things: get your stops wider, I suppose, might be such a bad idea, and just make sure your risk is under control. You don't want to be putting the house on anything around these events. I don't think. So yeah, that's an interesting bar, but and that's exactly what I'm talking about. If you're long here, your stops are under here, in places that are relatively safe, rather than, and I've more than anybody got to take notice of that, because the euro today, and here's a very good case in point. When I placed this trade, my stop was, hang on a second, I'll show you where my stop was when I placed this order this morning in TTR morning show. I placed this order underneath that bar there with a stop just above that bar there. So the stop was at 113.42 would have been where the stop was. But look where the daily pivot is. So the obvious place to put the stop is above the daily pivot. Yeah. And that's what I did. I did that a little bit later, to be fair, but that's exactly what I did. What did I say the level was? 113.42. If I have a look at the 30-minute chart, where we've been through this volatility, that candle there, after I'd been taken into the market here, right on this bar, this candle here was a shocker, absolute terrible bar. And the high of that bar is 132.425. So half a pip above where my stop would have been had I not widened my stop to where the stop should have been, which is above here, right? And in particular, when you got this swing, even if your stop was here, you needed to move it, to be fair, above the daily pivot. So that's the kind of thing I'm talking about, because these wild events can just eat you up. And you can turn a winning trade, which is what this now is, into a losing trade by simply having a stop too tight. And I think that's probably the one thing that's, I don't know, resonated with me in the past, I don't know, 6-12 months maybe, when I recognised that there is, volatility at play most days. There's something happening. And if you got your stops in the wrong place, and I would have had my stop in the wrong place had I not reassessed. So I had to tweak the strategy just a little bit to accommodate for that. And there you see that paying off in spades, because that would have taken me out, that candle right there. But it didn't, because I had my stop in the right place.
Yeah, I completely agree with that, mate. I think a lot of this, the management of your money, is down to giving the trade some room, and really that's I think that's another kind of, it's a rookie mistake, and it's it's something that is okay to make and initially, but it is a bit of a rookie mistake to think that if you got a nice tight stop, then the risk to reward ratio is going to be better off, because you've got so much further. You don't have to make as much to kind of start making profit.
Which is
you
very
just have
true.
to manage it.
But the problem is, you're going to get knocked over more often than you.
Yeah, you're going to get knocked over. Yeah, and again, this comes down to how if your emotions can handle it, doesn't it? Because if you get knocked over and you're okay with it, then no big deal. But if you find it difficult to take a loss, then all you got to do is just broaden those stops out a little bit and give yourself some time to think.
But this is a perfect example. Had I not recognised this and kept my stop where it would normally be, and I get knocked over by half a pip, and then this goes 200 pips, that's a massive difference to your bank account.
Yeah.
Massive difference.
Yeah, absolutely. Completely concur with that.
So we didn't get very far, did we, in the 30-minute bars?
No. So how are they going?
Well, really, we've come to a grinding halt on the back of that news. We've had a big move, of course, but once we've got there, we've come to a grinding halt. I suppose that's because we've hit a support level on these crosses. So, what we're seeing, given what you've said about that news, is the market saying, well, Trump's strong. That means strong US dollar at this point. That's what I'm seeing. Potential here for this to go into range. But we spoke about this yesterday with cable. And the interesting point for me, and it was always going to be this bar here, if we could get a close above that weekly pivot, and indeed the monthly pivot, this looked to be off to the races on the back of the EU leaders' decision over the weekend. But as soon as that didn't happen, something else was on. You're entitled to think, okay, why hasn't that happened?
Yeah.
And the technicals and the fundamentals are coming together here beautifully, absolutely beautifully. Where if you can actually see that at the time, and we spoke about it. We said, look, if this isn't going long here, we're going to get a very strong indicator that that's going to be the case by these pivots. And the pivots are going to tell us if this move is going to be on or not. And if it's not happening, something else is happening. I don't know what that something else is yet, but
there's been a lot of comments on Theresa May's. I want to talk to you about the euro in one moment. There's been a lot of comment on Theresa May's deal. And even Trump has come out and said that it's a good deal for the EU, but not very good for the UK, because it does tie us into to trade with the EU, and it does shackle us up to kind of go out and do other trade deals. So I think just across the board, there's just a complete lack of support for it.
Okay.
Yeah, so that's not really helping.
Tough to get through, isn't it? I mean,
I mean, I think it's not looking good. certainly not looking good. It's not looking likely at this stage that that Theresa May is going to get anything but egg on her face when she tries to get this deal rolling. She's got a televised debate scheduled for televised date scheduled for a debate with the Labour leader, the opposition leader, at on the 9th of December, which she's going to try and sell it to the country. But that's all she can do right now. Just just continue to try and sell it. But I think it's just looking like we could be in for some pretty tumultuous a pretty tumultuous time. Just very quickly, the euro inverted head and shoulders on the daily. How much validity are you going to put on that?
Okay, the thing with the euro for me is very much a case of this level here, which is what you're talking about, which is why I had my take profit level before that level, because I could see that shoulder.
Yeah.
And that was the obvious place to take profit, which is what we've done. So that's the key level for me right now. And if we can hold here, then there's potentials for long, no question. What that brings into question, of course, is the bigger picture, which is this line here, which is very strong. We've spoken about this 100,000 times. The level's 113.60. I think I've got it as 113.46 there, but my level is 113.60. Now, 113, right, is why we're not going any lower right now. That's what's holding the market up, 113, for some wonderful reason. That's just a whole number that's listened to, and the market reacts off it and to it. So 113.60 for me is the real level, and the level which will determine whether this is going long or short. But if you have a look at this bigger picture, it's very clear that once we get to this 113 level, we reject it, and we reject it. And if this goes 113, hello 108 suddenly, or 109 suddenly. So this is absolutely crucial where we are right now. Absolutely crucial. And do I think that we'll bounce from here? Yes, I do. I absolutely do. But if we don't, and that's why I was so keen to get short, if we don't bounce here, then there's a big hole underneath this, and I wanted to be part of that. Would I consider trading this long? Yeah, absolutely. If I get the right signal, I'll trade this long. I haven't got a problem with that at all. But the short just had to be taken if available, for that very reason that I just spoke about, because the reward, would I have a 22 pip stop? And if that 22 pip stop holds, and this does disappear, where's my entry there? 22 pips can turn into, 420 real easy, and potentially more. So yeah, that's why I had to take the short, to be fair. Do I see a range? Yep. Do I expect that there'll be a bounce here? Probably. But yeah, I've got to have that opportunity to take all of that if it's available. So that's why I'm short, really, rather than biased, if you understand what I'm saying. I'm short on reward rather than what I think. What I think is we'll have a bounce here.
Mm-hmm.
So yes, that the inverted head and shoulders, back to your question, I suppose, comes very much into play.
Yeah. But you wouldn't want to trade that, though.
Not at this point. Although that said, it's already setting up. It's already set up for me there right now. Problem with that is that I've got a very big bar now to contend with in relation to everything else. Although it's not that big a bar in itself, it's only 40 pips actually. Might be worth thinking about, Ash. Actually, that's a little trend line false break that I'm looking at there right now. It's not perfect by any stretch, but it's not too bad either. So a long, maybe where I've got my stop maybe a long's not such a bad idea. I can't take this long from here though.
Right.
That's not the way I'd play it. I mean, I know that's the way you love to play it, but
Yeah.
it's not for me. Now that said, if you're looking at this scenario, what do you call that? Morningstar?
Yes, if that closes there, what's that? A 15-minute bar? Oh no, half hour. Yeah, that
30.
would, yeah. Could yeah, it would be like a morning star, yeah, yeah.
Okay, so you would trade that above that bar? Is that if you chose to? I'm not saying.
I would trade, yeah. So if I was looking at that, because we're on a longer term time from on the daily, I'd be more interested in the hourly actually,
Right.
and have a look to see what the hourly does. But yeah, I mean, it would be effectively the same thing, that the hourly would look like a little hammer down there,
Yep.
and if the half hourly would give us the morning star. So yeah, absolutely, I'd want to trade above that with a stop at the lows, and that gives
Okay.
plenty of room to the DP as well.
Oh, definitely. Yeah, you've got profit there. Yeah, yeah. Look, not a bad idea. I'm not going to trade against my trade, but if I do get the in fact, I would consider. I absolutely would consider on the 4-hour chart when it closes in what have we got left? Hour and 10. If this closes as a well, pretty much as is, I wouldn't mind putting an entry above the daily pivot there. I think that wouldn't be such a bad idea at all.
Yeah.
Yeah, totally see what you're looking at. Totally.
Yeah, I mean, it's just there doesn't appear anyway to be a reason to collapse here, and there is an area of support there. So
Strong, absolutely strong. Yep.
that's pretty equal, isn't it? That left shoulder and the right shoulder looking in
Yeah.
really good areas.
Very close, very damn close.
And there's no doubt that that's been spotted. Otherwise, they wouldn't be buying there.
Yeah, we're not the only ones who can see that. That's for sure.
Yeah, yeah,
And there could well, and that's going to be the question, isn't it? And this was always going to be the question, whether this level holds or it doesn't. And if it
yeah.
doesn't, then that's a nice little channel there. Oh, actually, it's a good entry, Ash. you talking me into this.
You like that one?
It's looking a good entry to me. Yeah, and look, I've got to give myself a chance here for that big open space down here. So I'm actually not going to trade against that. I can't lose here, so that's fine. I think here's the place for me if I'm to go long. But yep, totally
Above
see where
the
you are. Yeah, above the daily pit, where my stop is, or
yeah,
where my stop was.
yeah.
Yeah, I think that's the place.
Yeah. Okay. Well, that looks like a good prospect. We got 10 minutes left until the top of the hour on the FTSE, and the FTSE is showing signs of weakness. I think
Well,
I
mate,
think
I'm
the
not going to
short.
change anything, and I'll tell you what, I wouldn't mind going and having a cup of tea before the next show, which starts in about 40 minutes' time. So
Okay.
I'm good to go if you are.
Okay. Yeah. Let's have one last look at this FTSE 100 and see what is happening. We're just having a bounce off this daily pivot right now. Nothing really suggesting that we have any specific movement, but it certainly is appearing that it's going to be tough to move to the upside. But as this isn't really kind of motoring to the downside, it's starting to potentially suggest that we could be trapped in a little bit of a holding pattern here, which is absolutely fine. So we'll wait and wait and see if there's any more uh, news or data later in the day. But I think, like you, mate, I think I need to let this market establish itself. This is still an area to go long down here, and I will consider that. But I'm a little bit concerned with the lack of catalyst to go long. So we'll see. But yeah, I will continue to watch that. But if I'm going to go long, it's going to be around about this 6,000, 7,000 to 7,010 level. So about 10 pips away from where we are now. And I'll take it long up to the highs, see if we can take profit, and then leave the rest run and see if it'll go through to that 72.20 level. So that's the current plan, but we'll see what happens down here and see if it's likely to hold or not.
All right, mate. Happy days. Yeah, nothing's going to change for me. If this continues to go short in the euro, then happy days. If it doesn't, I've got a fair bit of space before my stop. But I think if this candle were to remain as it is, I'd be more than happy to place. This is the 4-hour bar. I'd be more than happy to place an entry long at 113.46. That's what I'll probably do. So we'll catch up with that in an hour and 7.5 minutes time.
Okay, mate. Sounds good. Sounds like a plan. All right, mate. Well, I will catch you up in about 40 minutes or so.
Yep. Happy days. We'll see you then.
Great stuff. Thanks, man. See you soon. Thanks, everyone, for listening.